Good Sunday afternoon to you. This is Joe Pryor with the virtualrealestateteam.com in Oklahoma City. And I want to do another video today on financing with investment property. We've gone through a little bit of an overview of Oklahoma City. We've gone through some of the terms that we use, like cash on cash and capitalization rate, internal rate of return, that you can see in previous videos. But today I want to talk specifically about different types of financing that are available. Now, unfortunately, I think investors have been unfairly punished since the mortgage meltdown, since the housing meltdown happened, because starting with, I guess, subprime loans. Despite what a lot of people think or what you may read, 40% were investors that went into foreclosure because of subprime loans. 60% were people that moved into the house, something they couldn't afford, and hoping that there was no tomorrow, that everything was constantly going to go up. So what's happened is that if you go traditional now, and again, you have to go traditional Fannie Mae financing. There's no kind of other kinds of financing that used to be available. Oh my God, there used to be zero down for investors. Now it's Fannie Mae, which means a minimum of 20% down. And a way Fannie Mae works is that you can have a primary mortgage and then 3 other mortgages before they start penalizing you. So in other words, if you have a first home and a second home, and they have mortgages, then you can have 2 investment properties, or if you don't, 3 investment properties. Now you can go beyond that. You can go up to 10 properties total with Fannie Mae, which is not bad. However, all your down payments after the 4th is 25%. Then there is 6 months principal, interest, taxes, and insurance that you have to put in reserve, not just for that 5th property, but the previous 4. It can be $40,000. So what do? Well, one thing that you do is if you have a 401k or something like that with $40,000 in it, then that can be excluded to have to put that money back. But most investors don't want to stick $40,000 into an escrow account that's drawing $0. So Fannie Mae is good. 20% down is fine. I think we do need some leverage to cover down times in our market now that we know that the markets can go down again, as we've seen. So 20% down is not bad. Now, what are the other alternatives that are out there to doing Fannie Mae financing? A second type of financing is there are some specialized kinds of Fannie Mae loans and VA foreclosure loans where they can offer you a special financing package. There's a 10% down package with Fannie Mae, still, of course, within the limits that Fannie Mae sets for the number of mortgages. And then also VA, which is really favored. I wish we had more of them here. I have sold them to investors. But this is when a veteran goes into foreclosure, and you don't have to be a veteran to buy it. And you can buy as many as you want. It's 5% down, which is fantastic. There is no mortgage insurance, just like with a veteran. Now, there's quite a bit of upfront cost that you've got to consider, and it's also typically a multiple bid item. In other words, you're going to be bidding against other people, so it's not like you can get this stuff real cheap. But the values are there, and using those investment phrases we talked about earlier in previous videos in terms of your rate of return, we can find still very, very good rates of return. The other advantage of VA is that if you're going to get an appraiser, or you're going to show that that property, say for instance, rents for $1,300 or $1,400, they're going to allow you to take potential rent, in other words, even though you haven't closed on it, potential rent, and apply that to the back end. In other words, apply it to the 41%, which is your maximum amount. So there can be real advantages there. Now, another type of financing that you can do besides, of course, cash, which we all know will buy anything, is something that we're doing. A couple of things, actually, that we're doing right now, and I'll go into more detail in another video. One of which is that we have fund managers who are asset managers for people with large amounts of money. I mean, it's not quite like a hedge fund, but there are millions of dollars there. And we can put together mortgages for people who don't want to get into that Fannie Mae issue. And this is a situation where, you put 35% down, you get a 30-year AM schedule, you get a 10-year balloon, which is more than enough to do a refinance as this market improves for financing, which it will, especially for investors. And there's some other issues that I can talk to you about. I won't go into detail here, but that's an option. All you got to do is have a minimum credit score, which is normally 640 to 700. Fill out a credit application. That's all they're going to ask of you, because with 35% down, they feel very comfortable that you're not going to walk away. That's a type of financing. Now, there's another type of financing, which is an owner carry. In other words, where the owner of the investment property wants to start selling out. You know, we have these people in Oklahoma City that have 200, 300, 400 properties. They're really wanting to cash out a lot of them, and they're going to pay some capital gains. They know that. One way that they can avoid an upfront capital gains charge is to finance the property for you. Because, you know, for instance, let's say they ask for 35% down on owner financing, and they finance $100,000 and you put down $35,000, for instance. Well, their capital gains is only on the $35,000, and so they can defer the capital gains on the rest of it. So that really helps them. Plus, they get an interest rate. In other words, plus they get interest on their money. So it's an investment that just keeps going on, and a lot of times these already have renters built in. So there's a lot of ways that you can get into the investment market, which is a wonderful market to get into right now, because properties, as you know, everywhere in the United States are not at an all-time high. If anything, they're at an all-time low. So we can go through traditional Fannie Mae. We can go through certain types of repossessed property from Fannie Mae or from VA and get you some very, very special terms. We have fund managers that are funding millions of dollars to invest in real estate, and we can get you into loans that way. Or finally, there is the owner carry, which is where a large investor, and by the way, the only way that we do the owner carry is if there's no mortgage left. We don't do what's called a wrap or a contract for deed, because I just don't like that kind of a risk. I don't like the idea that somebody might default on it and you put out thousands of dollars and lose the property. So the only way that we'll do that is that when you go to closing, it's completely paid for, so that the only lien holder is the owner, nobody else, no other mortgage company, just you and the owner. So those are the types of financing that we can do in Oklahoma City to get you into investment property with positive cash flow, with a stable market, as you've seen in our videos. So stay tuned. We're going to go into some of these specialized financing type of loans with you in more detail in some subsequent videos. So this is Joe Pryor with the Virtual Real Estate Team in Oklahoma City, where we deliver traditional real estate values with the speed of technology.